Good morning, everybody. Happy Wednesday. What is today? Wednesday? I keep forgetting. Yeah, it's Wednesday. It's Wednesday today. So good morning. We are going to get started here in just a minute. Just check one more thing here. All right, good. Okay, again, good morning, everybody. Happy Wednesday. Hope you guys are doing well. Quick housekeeping note, I am traveling tomorrow, so no set the market tomorrow, but we are going to move ticker Thursdays to ticker Wednesdays. So today, if you guys have any stocks you want to look at or anything at all for that matter, let me know. In fact, you can start typing those things in right now so that we can get started. So that's number one. Number two, I actually want to start off this morning with talking about a concept called average true range. So when you look at the market right now, lots of people are kind of quiet. No one's really panicking, or at least not that I see. So I wanted to bring up something called average true range to kind of show you the low volatility we have. And we've talked about average true range before, but I wanted to give you a little bit of an idea what that means. So I'm pulling up the chart of the S&P 500 here, and I'm going to show you what this looks like. So this is roughly here the trading range that the S&P 500 has been in, something like this, albeit it's gone higher, right? But this is roughly the trading range that we've been in for the most part since we've established that range, which is roughly since late October, so between November and December. Now, you might ask yourself, why do we have this trading? Now, we're at the upper end of this trading range, but the reason we have this is because the NASDAQ 100, as we've talked about for the past few days or past week or so, the NASDAQ 100 is underperforming. So the chart that I showed you guys yesterday was this one here. Let me quickly show it to you here. And we're going to talk about this, by the way, in much more detail today at noon Eastern, so 9 o'clock Pacific time, when we go into this week's strategy session and we look at how we can find these major changes of trends. So the chart I showed you guys yesterday is this one here. I'm trying to bring it up here. I have to move this a bit slower here. This one here. And so if you recall, what this was essentially showing you that since November 1st, so since the end of October, which is the same thing I just mentioned before, you can see that the tech stocks are actually down quite a lot. They're underperforming dramatically many other things. And so it doesn't matter whether we look at it versus other parts of the equity market or whether we look at it versus, in this case, non-US equities or emerging markets. The NASDAQ 100 is certainly in a weaker spot. And that's also why, and this is, we keep trying to make this clear to people, this is why mathematically it's very challenging, dare I say impossible, for the S&P 500 to go much higher. It can still go higher, but much less so unless tech has a leading role. But tech is almost 50% of the index, and if those stocks don't lead anymore, and they're going to take a pause at some point, probably for 5+ years, the index cannot go higher. Right? Or again, very, very limited in terms of what it can do. So right now the market's kind of lulled to sleep because we have the index level, right? Because we have a lot of things that are acting very well, and you guys will find out about this in today's strategy session at noon, like industrial stocks, right? For example, there's tons of other stuff. But the tech sector, so looking for example, the XLK, it's largely dormant, as we just said, right, since the end of October. So it cancels it out. So you have all these sectors doing well. I can show you this in this way. So if you look at the past, let's say, let's take the past 1 month, okay? This is not enough, but good enough. Actually, maybe we can go back a bit further. Let me see if I can go here. There you go. So this is pretty good. So if we take the past 3 months, this goes back a bit further, but it's good enough. So over the past 3 months, you can see that technology stocks haven't done terrible, but they've underperformed dramatically other parts of the market, right? So that's why the index is kind of lulled to sleep and why a lot of people are bored. But there's actually a lot of stuff happening underneath the surface. It's just not that exciting AI chart chasing story that we've seen for so long, right? Although semiconductors had a decent pop over the past couple of days, so keep that in mind as well. But that's that. Now I want to introduce you to this thing called average true range. It's just another way of looking at volatility. So I'm going to quickly open this up here. I think I've got a template saved here. Let me see. Average true range. Where is this? Here. Okay. So let me update the latest version. Get rid of this. So this is this line down here, this red line. You can see that we had a very volatile April last year, of course, if you recall, but volatility has come down a lot. And the average true range since just about Thanksgiving, meaning the volatility, has just continued to plummet again. So again, it lulls people asleep, and I don't see an immediate catalyst for the market here to fall apart. But we'd want to be mindful that when we get to a low average true range at some point, the odds are increasing for us to have a volatility jolt. I don't know when that is. I have no timing on that. I don't really see one right now, but we want to be aware of that. So that's one thing that I thought I would point out to you. Another thing that I think is important here, something that we've been talking to clients about, is really what's going on underneath the surface in some of the sort of crypto things. So I'm going to show this to you like this. Okay. So if you look at through the lens of momentum, you can see that, for example, Bitcoin and other things as well. We actually sent out a trade alert this morning to our members of the Trender Momentum Indicator, or if you haven't received it, you're going to receive it. But you can see that Bitcoin is actually going back to bullish momentum, right? So momentum actually started going to the downside in October on Bitcoin, and Bitcoin then dropped as much as 30%. And then we've been talking about this for the past few months, that Bitcoin was oversold, but it certainly wasn't a buy yet. So if you subscribe to the Bitcoin bracket, which I think many of you do, you get that weekly report where we talk about the long-term trend and the short-term momentum on Bitcoin. And momentum turned back to bullish just about a week and a half ago or something like that on Bitcoin. And that also has Bitcoin-related stocks acting a bit better. Again, if you subscribe to the Trender Momentum Indicator, you're receiving an email this morning with one candidate there. I want to talk about the banks real quick. So this morning, I'm looking at Bank of America here pre-market. They reported their numbers down, not much, 1.5%. But I would watch the banks very closely. I am. So because the banks have had a really good run. I'm going to quickly get rid of this. But what the banks are also doing is beginning to mean revert. So this is JP Morgan, which I think is probably the most important stock in the world. That's my own humble opinion. I could certainly be wrong, but JP Morgan was very overbought, and now it's mean reverting. Sort of, it's not a short necessarily, but it's mean reverting. So, we'll have to see how the banks hold up. I usually am a bit skeptical of early January price action, as I've been saying here for the past year to date, right? So week and a half, 2 weeks, whatever it's been. And I would be a bit careful doing too much here. I'm going to see how JP Morgan acts over the next couple of days. I'm typically quicker to do a trade on JP Morgan after earnings, but because we're early January and it's just a weird, concoction of things, so I don't really want to do too much. Which gets us to some tickers you guys are asking for. Someone before I just saw wanted to look at Netflix. So if you guys have tickers you want to look at, let's have a look at Netflix. So first of all, let's understand with Netflix what's actually the trend. What's the prevalent trend in Netflix? And this is, again, where we come back to our process that identifies the trend and then the momentum. So if you use our trend following process using the market rover, you would have been well advised to get out of Netflix probably somewhere around October of last year, right? So the stock was in a bullish trend, the green background color. Let's go back forever, right? And then it finally went into neutral trend, which means get out of longs, back in on end of October. The stock so far is down 20% since then, okay? Now, that's from a trending perspective. So from an investment perspective, I have no reason to own the stock. In fact, our process has very clearly told us in late October that the stock is no longer in a bullish trend, so it means get out, basically, from a multi-quarter perspective. In the short term, if we bring up Netflix, we're looking at something called momentum. And in the short term, and this is now the multi-week, you can call it multi-month in this case, signal. The latest signal we had came on the 22nd of October, right? So that was even before the trend changed. Momentum changed to the downside for the short term. Since that signal, you can see that Netflix is down about 20%. So the trend has changed in late October, not now, right? In late October, and the momentum certainly changed in even before then. So this is definitely not a stock I would want to buy. I'd wait for at least momentum to change to see for a trade, and if it ever turns back into a bullish trend, maybe I can consider it again from an investment perspective. So hopefully that addresses the question on that. Next one is question on the Russell 2000, so that's the IWM ETF. And the question is, what do you think of the IBM breakout? Well, again, instead of thinking, what we like to do is we like to follow a process. So let's have a look at what's going on. So the IWM ETF is in a bullish trend. Okay, so that actual trend, that's the multi-quarter stuff, started back in September, right? Not now on the breakout, but back in September, right? And so it's now up 10% or whatever. Yeah, about 10%. So that's the signal came back then, not now, right? A lot of people are chasing it now because it's making the headlines, but the reality is the signal came back then. And from a short-term perspective, so from a momentum perspective, let me give you this. The momentum for a shorter-term trade in the Russell 2000, that signal came on the 28th of November. It was actually valid on the 1st of December. And since then, the stock is up, or the IW is up 6.5%. Can I get a quick yes if this is making sense to everybody? Right? So it's not about guessing. It's about having a process for us, right? That's what we do. And then another one here is on Apple. Actually, before we go to Apple, let me just quickly make sure everyone's aware of today's strategy session. So Christian typed in the link for today's strategy session, which is going to be where we teach you how we find these major trend shifts, right? So for example, we talked before about NVIDIA, right? Excuse me, Netflix going into a bearish trend back in October or September, whatever it was, or how we can find the new trend that started back in the Russell 2000 back in September, right? So we're doing a strategy session today at noon Eastern, that's 9 o'clock Pacific. So if you guys want to learn how we find these major trend shifts, right, this will be the session you want to join. It's free, obviously. You also, if you join us, you also get access to our Rethinking the S&P 500 chart index, which I think is a pretty critical thing to understand, in my humble opinion. So make sure you join us in that session today. Obviously, it's free. It's our weekly strategy session. But what we're going to cover is how to find these trend changes, right? So, for example, in fact, I've got a lot of people always ask these questions. So, for example, I don't know. Let's take, for example, GE, right? So this is a stock that continues to act very well, but a lot of people are chasing it now. The reality is that the trend in GE, turned bullish back in January 2023, not now, right? So you can see the trend is the stock's up 550% since then. There's trades along the way, you can see, but the trend shifted. It went from a bearish trend, the red background color, through a neutral trend, through a buy signal. So instead of chasing it and buying the stock 100 times and doing options, this and that, I could have just bought the stock and held it, or done option trades along the way. That works just as fine, right? But the point is, people don't know what a process looks like because they're never taught the process. So if you want to know when these trends start and when they end, according to our process, join us this week, specifically today at noon Eastern, 9 a.m. Pacific, for that strategy session. Okay, so Apple. Let's have a look at Apple. Now, Apple, of course, has been in the news a little bit here again with some of the AI stuff that they've been doing with Gemini and all that stuff, which, by the way, I'm a big user of Gemini. I happen to really like it. But let's have a look at where Apple is. So again, we don't really have to guess. We have a bullish trend. So Apple is an actual bullish trend. So that's your multi-quarter perspective. That bullish trend started in October. The stock is up a little bit. It's not exploding to the upside. And in the very short term, if you're looking at Apple just very, very, very near term, the stock is in a bearish momentum phase. So we had a sell signal that came on the 18th of December, you can see it reached its free profit target. So if I took that trade, if I bought a put, short the stock or whatever, I would have now reached the free profit target at the at those green dots right there. So that's that. If there's any more tickers, let us know. I'm happy to stick around another couple of minutes. Otherwise, we will see you guys in Set the Market if you are a member in about 15 minutes. We'll see if there's something to do. Markets have been very quiet, right, overall on the index level. But underneath the surface, we've seen a lot of bullish price action, or in the case of Apple here, actually bearish price action. But so there's plenty of stuff to do. It's just that the index is dormant, and that's largely why people's portfolios are probably going to go sideways for the next 5 to 10 years in our view. So make sure you're properly allocated. So that's it, folks. Have a wonderful rest of your day. And we'll see you guys back here on Monday. Monday is, gosh, what is Monday? Whatever. Still January. Yeah, tomorrow, again, just a quick housekeeping note. Tomorrow I'm actually traveling, so I can't do the Set the Market, but we'll be back here on Monday. And in the meantime, any questions, let us know. We have a great team to help you out. Trading well and stay patient here in January. Take care.